Hey, what's going on, everyone? It's Marlon here. We are live, season 2, Conversations with Marlon. This is episode 3, y'all. Equipping you here to live your best life. I am so excited this afternoon. I have a good friend of mine that's going to be joining me. We're going to have some talks today about the home buying process, preparing yourselves, getting ready. Some of you might be ready and you need someone to talk to or to consult with on whatever needs that you might have pertaining to the process. So join in on this conversation, guys. I want you to share this with your friends, your family. Let everyone know that we are on today, guys. And if you can, please follow us here on Facebook, Marlon Croasdaile Music. Also on YouTube, subscribe, hit that subscribe button, because we're going to be having some more talks and conversations that's going to help you guys. Our goal and our mission always is to equip you to live your best life. I see one of my top fans on this afternoon. My sister, what's going on? What's going on, Nikki? My wife, of course, guys, the producer over on the other end, holding it down. I love you, babe. Thank you so much. Listen, guys, this friend of mine, she is amazing. She has a plethora of knowledge that I believe is going to be so beneficial to us this afternoon. She is currently residing in Cleveland, Ohio, and we've known each other for many years now, and I have connected her with some of my people. She has connected me with some of hers, and her family is just an amazing family. She is a loan coordinator, and she is going to be helping us out this afternoon. I introduced to some and to all Naomi Norris.
Hey, Marlon.
Hey, what's going on?
Good. Everything's good. Thank you for calling me in.
Anytime, sis, anytime. It's definitely the right season for us to be doing this because, I don't know about y'all, but I heard some people, I was at work yesterday, they were like, man, I got that stimulus
Right.
money.
Right.
Yeah.
Yeah, a lot of people are thinking to spend, but I have a different point of view.
I'm telling you. So before we get into that, why don't you just introduce yourself to our followers and our viewers this
Yes, once
afternoon?
again, thank you, Marlon, for inviting me to your platform here. We've been, my husband and I have been following you, so you've been doing a great job. So keep it
Thank
up.
you. Thank you.
But as Marlon said, I have a plethora of information, experience in different areas, more so in the finances. And to be more specific in that area, would be more like life insurance and mortgages. By degree, I am a biological scientist, but we are no longer dabbling in that career field since I had the little one. But excuse me. But from since then, we've just been working on the mortgages, learning more, getting our license in that area. Got my license in that area for been a loan officer for since 2017. 2017, yeah. So I literally left the science teaching world and jumped into that. So, but even between then, I always did life insurance from whole life, term, you name it. Anything when it came to life insurance and annuities type of retirement, I done that, been doing that. We'll be going back into that. But I do have a few businesses. One was the life. We just started our new business called Easy Virtual Services. So that's another thing we're working on. So we help businesses relieve their load of the administrative side so that they can focus on the creative and we do the administrative work. Type of thing. So we had started, literally it's a baby, started it last month. I have a couple of clients already. But besides that, my main focus is mortgages, helping family and friends and strangers buy homes and how to prepare to buy a home. Sometimes you can't just buy it because you want to buy it right now. Right. So I help them in that process of to get them ready to be able to purchase a home that they can call home. Right. And also financially giving them some knowledge and how to maintain. So a lot of time we think we could just buy a home, but there's some habits that we need to create before buying a home.
Mm,
So that helping them understand that process
yeah.
too. So yeah.
Wow, that's awesome, man. So where do we begin? So
Ah,
let's say I come to you and I say, man, I'm looking to buy a home. What would be the first thing that you would ask me?
first thing, which you did, but the first thing would be how is your saving habit? What is your savings?
Mm,
People want to first jump to the credit, but actually it's your saving. If you are not creating a system, a habit of paying yourself first,
yeah,
then you can't come to the point of buying a home. Because so now you're gonna cycle where you're going to be living paycheck to paycheck and then
yeah,
figuring out, okay, I have to pay this mortgage, but yet I have to do all these other stuff because a house comes with responsibilities,
right.
because if you're not saving when you buy a house, for some reason, every client that I ever had, when they bought a house, something happens within that first year that they had to
Mm,
dip into their pockets to fix. But
right.
if you are able to save for specifically for your home,
Yeah,
you didn't have to worry about the income that was already coming in. You already had a bucket just for that. But
yeah,
that came from saving before, be creating that habit of saving. So that and saving is just the foundation because you save for a bucket, but you need to save where that money that you're saving is making you money. But that's a whole different topic. But
man.
and so
That
we go
surely
there.
is. That surely
But
is.
primarily the elementary kindergarten step is saving. And then when you create that saving step, I'm be like, okay, now let's look at your credit report. So a lot
Mm,
of times we think, oh, I have 800, but I have clients who have 800 credit scores. But when you look at the amount of debt that they carry,
uh-huh.
so people don't understand the concept of debt to income ratio. That determines how much you can get.
Right.
Your credit just tells you your interest rate. Your debt to income tells you the amount of money you can get. So a lot
Mm,
of time people think, oh no, I make six figures. How come I can't get da 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 da? But you have $150,000 loans in student loans, or your
mm,
car is 50 something thousand plus whatever else you're paying. All that, any credit cards that you have comes into account when we're
right.
calculating your debt to income
All,
ratio. Yeah.
all credit cards, car payments, all that good
Yep.
stuff.
Yes. Child support. Um, Everything. And some people think just because they have like social security, they can't buy a house. That's a lie. Yes, you can.
Mm.
It's income. So anything that we
Uh,
can verify as
yeah.
income is income.
Let's go back a little bit there. So you were
Hmm.
talking about debt to income ratio.
Hmm.
Let's kind of break that down a little bit so
Oh,
that
yeah, yeah. Okay, so debt to income ratio. So you have something. Oh, you know what? I got a pad. I was ready. I was ready for you, Marlon. So debt to income ratio is basically it's gonna look like, okay, so 32 over 40. So it's gonna look something like this. I don't know if you see it. 32 over 40, right?
right.
Yeah. So
Yeah.
your back end right here, the back end is gonna
Yeah.
tell you, okay, well, you have this much debt over your income.
Yeah.
So you always want your back end to be lower. So that means your debt to be lower.
Hmm.
So this number 32 over 40 is basically what FHA, mostly of the government loans use as your max, depending on if your credit score is above a 680, then we can go up to like 45 at the end of the amount of debt.
Mm.
So percentage compared to your income. So if you look at your income divided by the amount of debt that you carry total in a monthly stance, monthly,
Monthly.
not yearly,
Yeah.
monthly,
Monthly.
that will give you a percentage. If it's above a 50, you are carrying too much debt.
Mm.
45 is where it's the max for most loans, but they will consider. Now that's when an underwriter and all that stuff comes in and say, well, but the debt that they carry is really not that, serious, or their credit
Right.
score is still good. So we're gonna take a chance with this person. But if you go above that, there's a lot of other factors that we have to look at that makes the application process on the back end more complicated. So
Got
that's
it.
where they're talking about creditors seeing you being worthy of. It's not really the credit score, it's what you're carrying as debt. Can we really trust you to
Yeah.
carry another one?
Gotcha.
Yeah.
That's good. That's good. Thank you so much for
Yeah.
breaking that down, because I definitely had someone in the audience that was asking about that. And
Oh,
guys, if you have any questions, please feel free to
yes,
drop a
yes.
comment. We'll definitely try to answer them as we go on through this conversation today. Hi, Mom. I see you. I love you. Thank you for joining.
Hi,
Just wanted to put it out there. She was like, "My mommy is here. Thank you so much, mommy."
Mom. Yes.
So yeah, so we talked about debt to income. You said the first thing is saving, creating a habit of saving. Now, let's say weekly, monthly, what would be a good starting point for someone?
So be realistic with yourself. Know
Yeah,
what you can afford. So if you're comfortable paying 1,000 a month for the purpose of like your rent is 1,000. You're used to paying 1,000.
yeah,
Okay, but let's say your income increases, like, you know what, my max is 1,200.
yeah,
Then you know what you need to do is save at least 3 months of that into your account. At least. That doesn't mean stop saving. Just make sure you have at least 3 months of that already saved. This is not including the down payment for your loan or the closing costs for your loan. There's these. Let's separate those three things. You have the open your down payment,
yeah.
you have your closing costs,
Mm-hmm.
and then you have reserve. What I'm talking about is the reserve, that
Uh-huh.
3 months. Because what you're telling the underwriter, because the underwriter is the final say. The
Right.
underwriter will say, you know what? Oh wow, they have 3 months. It's crazy because you can use that money after you purchase. As soon as you close on the
As soon
home,
as
you
you
can
close on the
deplete it.
home.
Yeah, you could deplete it, but that's not my advice. But
Mm,
you have that 3 months. What you're telling the underwriter is that person is able to save. They
right.
have at least 3 months of mortgage payment that we
Yeah.
know they can pay. So the
Yeah.
more, the better, but
Yeah.
they look for at least 3 months.
You see, I've never heard this one before. I've always
Really?
thought, and this is why I'm really glad that we brought you on, because, people are always saying, all right, I need to save my down payment. I
Right.
need to have my closing costs ready. But
Mm-hmm.
what happens when you spend all that money after you buy the home? You have nothing.
Exactly nothing.
Yeah.
You're house poor. That's what they call it. House poor. You got a house,
Yeah.
but you're poor. You got nothing else. The
Right.
only thing you can do is pay your house, so
Right.
that's not good. That's not
Nah,
good.
that's not how I want to live
Mm-mm.
either. So
No,
for sure, I'm sure nobody out there wants to do that as well.
no.
So all right. So savings. We talked about debt to income ratio, credit. Let's talk about that.
Oh, credit. Okay, so there's credit is a tricky one because
Yeah.
it depends on the lender. Excuse me, it depends on the lender, and it also depends on what type of loan you're looking for. You're
Yeah.
planning to, because if you're most the middle class, lower middle class, are more so going towards FHA government loans, FHA,
Yeah.
USDA type of loans. So, or mass housing. There's different. Even the states. Some states have different their own. So
Yeah.
those are more governmental type of loan or state loans. So when you are talking about those, they are a little bit more lenient for the credit score, but
Yeah.
that means your interest rates would be higher. Remember, I told you your credit score ties to your interest rate.
Yeah.
So, for example, right now, due to the what happened with COVID and everything, interest rates did drop
Yeah.
significantly. I'm talking about around 2%. Some people were able to
Wow.
get around 1%,
Mm.
around the high 1%, depending on your credit. So let's
Mm-hmm.
say you have, I have a 580. I would never advise you. You can't. That's the thing. You can't get a loan
Mm-hmm.
for a government loan for a 580, but you're going to have to jump a lot of hoops and a lot of documentations are going to be needed.
Yeah.
So, but the crazy thing is, so average interest rates right now, I would say it's around 280, 2.8, 2.8 to the threes,
Yeah.
right? A 580, you're going to be around the 4.5%.
Mm.
So your mortgage payment that could have been around 600,
Yeah.
depending on the loan, is now around 9 to 1,000
My
because of the
God.
interest rate. It
Yeah.
takes you 2 years when when you get a home and you have such a high interest rate. What happened is it takes 2 years for you to even start touching the principal.
Wow.
Yeah,
So for 24 months, I'm
24
just
months.
paying interest.
Interest. You're paying the bank. Paying the bank. Yeah.
My Lord.
Yeah.
I bought some cars in my day, and I kind of understand that whole
Yes. Yeah. You're
principle.
you're throwing money away that
Yeah.
you'll never see again. It's
Wow.
not. Is it bringing you value? No. Yeah, you got a house, but you'll never see that money again. So now you're gonna have to find ways to leverage and balance all that out.
Right.
So I
Now,
was. Uh-huh.
I'm sorry. I'm gonna jump on real quick. Credit score. Let's, because I know a lot of times you have single moms, you have dads out there, but
Mhm.
married couples, right?
It, I'm happy you said that because people think, well, my husband has a 720 and I have a 600. We can do it. No, boo boo. They're gonna look at the lowest. That's what
Oy.
determines. Yes, the
Ah,
lowest score determines the score that they're gonna use to determine your loan. So you sometimes I have clients where the husband and wife they two different credit scores. For example, I'm doing a loan for my cousin.
yeah,
His wife has a 720. He has a 625.
yeah,
And I was like, you know what? It will be best that you are not on the loan, be on the deed. You're just not going to be on the loan because your interest rate is going to be too high. It's not worth it. They live
mm,
in Massachusetts.
yeah,
It's a no-no.
gotcha.
So they have to cope with the fact that it's either they wait until
Hmm.
his credit score go up
Yeah,
because two incomes is beautiful. Two
it's
income is great.
beautiful. Yeah, you get more, right?
Yeah. So just because you get more, but also let's say since my cousin's unable to get on the loan,
Yeah,
we can give the underwriter the statement stating, hey, there's an extra income in the house. Even though the loan is lower, but we might be able to get it a little bit more higher, knowing that there's more income in the house.
gotcha.
You see, no, they can't be on the loan. Their income cannot be used on the loan,
Right,
but it will be considered for a clear to close for a consideration that they're worthy to get the loan.
gotcha, gotcha.
So if you are the corporate here with the lowest credit score, I would say if you want to be on the loan with your spouse, you have to get your credit score up to 640. That's the minimum I'll ever tell anybody to do it. The
640.
640. It's not great interest, but it's not bad interest neither. The
Right,
interest is
right.
not too high. It's not low.
Yeah,
But ideally a 680 and above.
right.
Ideally 680 and
Now,
above.
so we're talking about people that have established credit,
Mhm.
things might have happened. The score is not as high as they would like it to be. But let's talk about someone who is just graduating from college, just started their
Mm.
first job, might not ever have had or opened a credit card or
This
have
is I
income,
love that. You still can
you
buy a
know.
home. You can still buy a home. So what we would tell you to do is go open a credit card. That or or be let's say your mom has a credit card that she has been using it wisely. Her credit score is great. If she adds you to it, and you never had credit now.
Yeah,
You add your name to the credit card. You never,
right,
I'm talking about those who are just graduated from college, never had a credit card, never really had a credit. It's
right.
zero. The credit is zero. This day their mom add them, the person with the great credit
Great
adds them to
credit,
their
yeah,
credit. The credit
yeah,
card that's being well used, very well used,
yeah,
their credit score will match that person. So let's say your mom have a 720. She uses this credit card that's for 10 years, always
yeah.
has a low balance, always paid on time. She adds you on there, you get the 720.
Mm,
That only happens when you have a zero. Now, let's say you have 580 or something like that.
mhm,
But you never had a credit card, but your credit score is low. She'll add you to her credit card. Your score will go up to around the 600s also. It'll go
mm.
up.
That's
Yeah.
good.
So
So
that'll be the first step with them.
now,
Yeah.
what about a parent that says, "Man, I want to make sure that my kids are ready once they're out of college."
Absolutely.
Can they open that card and just set it to the side and say, "Hey, I'm not going to give this to my child yet," and just
Yeah. They can open it. What I will this is what at least with me, what I will do with my son.
yeah,
We have our own credit card.
yeah,
But when he comes of age, because you can put them when they're 18,
yeah,
he comes of age, I will add him to that credit card.
yeah,
So that way he's building credit without him even knowing it.
Mm-hmm.
But when I realize that he is financially mature enough, I let him know he has a credit card. He'll have one
Yeah.
where he can use it and understand the concept. Because a lot of time we have the stigma that credit cards are bad. It's not bad. It's the usage, how to use it. How do you use it for leverage? How to use it is the best. Is how people need to think about credit cards. I'm helping my cousin with hers. I told her, okay, now I see you're responsible to you're managing your money with your paychecks. You know how to save. I said, okay, girl, open a credit card. Now that you open a credit card, this is what I need you to do to build yourself up. You have 3 subscriptions, a Netflix or whatever. Use that because you always pay it every month anyways.
Right. Your phone bill.
Put it on your credit card. Yeah. Always take it out of your paycheck. Use it on a credit card and then pay it. There's a trick to credit cards to get your credit score up to. If you already have a credit card, but your score is kind of low, I can literally look at your credit report and say, hey, if you pay this much, your credit score is going to go up this much. Sometimes people think I have to put my credit card to 0. No, never close it. Don't put it to 0 right away. So let's say you have a credit card that's a limit of 500.
Yeah.
And you're using 350. That's too much.
Right.
You need to have 50 and under. So I will tell you,
or under.
No, $50.
$50 on a $500
being used. Yes.
Okay.
So what happened is I would tell them, hey, pay that 300 towards it. So now you have a balance of 50. Wait until the payment, the statement comes to show that you have a balance of 50. That's going to shoot your credit up. Then after that statement, you pay the 50.
So your utilization rate is
still there, but it's lower now just by that month. And then having it low for the next 2 to 3 months kicks up your credit score. Yeah. I don't advise people paying. You know how they have financial institutions where you'll pay us and we'll clear your credit. Get you. I'm not a fan of it because that money that you're paying them is money that you could have leveraged to negotiate with your debtors. Because a lot of times we don't know, some people don't know that you can call people who you owe and say, hey, you know what? Due to COVID, I'm going to use our situation now. Due to COVID, I lost my job and I really want to settle this. I know it's $2,000, but you know what? I have $850. You go at the low end, $850. Can we do that? They'll be like, you know what? We can't, but we could do it for $1,000. Bam. Okay, good. It'll be settled, paid in full.
Yeah.
And your credit. And then that will boost your score up. Better than paying somebody to do it. Yeah.
That's awesome. Yeah. I got another question here. Do you recommend increasing the limit on those credit cards?
Whenever you increase the limit, know that's an inquiry that's coming against you. So if your credit score is already low, I wouldn't do that.
Okay.
Most credit cards, for example, Capital One, if you have a Capital One, within 3 to 6 months, they will automatically do a soft check and increase it based on your usage.
Your usage, as long as you're paying on time.
And your limit is low. Yeah,
right.
They will.
So they tend to increase over time on their own as long as you're right.
Repeat again.
So they tend to increase the limits and tend to increase.
Yeah, credit cards they tend to do that. Credit card, like unsecured credit cards, not store cards. Store cards will do that sometimes, but be careful with store cards. They hurt you more than they work for you.
Really?
Yeah, because your people tend to use them more frequently than it is their credit card. It's a psychological thing. Hey, it's JCPenney. I have a JCPenney credit card. I need this. I need it. You tend to swipe that more than it is another a secured credit card, like just a Capital One Visa. That's it.
Right.
Yeah. But so I would say keeping a low balance is the best. A low balance and using it wisely.
Now, how many credit cards would be healthy for someone that's never had any?
If to start off, I'll say 1. I personally don't believe you need to have more than 1.
Gotcha.
I really don't. Because think about it, you have a credit card. One day you're going to end up buying a car. That's going to be another monthly payment. That's part of your credit.
Yeah.
If you have student loans, that's another thing that's just going to be on your credit. And when you start paying, and when you pay off a student loan, oh my God, your credit score skyrockets, by the way. Yeah. So those monthly payments are part of your credit. So I literally will say just one credit card. But if you feel like you can handle it, go ahead. But my advice is to have one. Like, for example, my husband and I, we both have one.
Yeah.
That's it. I hardly ever use mine, but I have to use it for the sake of credit purposes.
Right.
So Netflix, $8 or whatever it is, $15 gets off of it. I pay it off.
Yeah.
Yeah.
Yeah. When I was working with a major airline a couple years ago, I actually opened up a Sky Miles card with them.
No, it's good. That would be good. That's one of the cards that we have is with United. But the reason for it, think about it now. Remember, I'm all about return. What's the return for me? Right. I'm not trying to give you something that I'm not getting anything. So we travel to Africa like Scott, and we're planning to go to South Africa this November. So that means, I'm getting mileage. So that means I'm gonna get a free ticket next year.
Come on now.
You see what I'm saying? So I just saved $1,000 and some dollars because tickets usually are around $1,000.
Right. And then you normally get like miles for like gas, restaurants.
Yes. I have to be able to get a return that I will use. Don't get something because they say they're going to give you this and you never like the mileage. If you don't fly, you don't need it. Don't do it. It's like there's no need for you to do it. So use the stuff that's actually beneficial to what you're doing.
Cash back.
What you're doing. Yes, cash back. Oh, cash back. That's another thing. But you still have to use it wisely. You see what I'm saying?
Yeah.
So whatever the perks are, make sure that perk fits you. Because if it doesn't, you're wasting you just wasted the inquiry on your credit.
Right.
Yeah.
There you have it, guys. Man, that's good. That's good. All right. So we talked the credit. We talked about debt to income ratio, savings. What would be next?
I would say the next thing to do is, well, after you close on a home, and I know people, so this is where it kind of ties in with savings because I know we are in this society where we're all about show. Okay. I got to show people I got this. I got to show
Keeping
people
up with
I
appearances.
got that. Don't do that. Like I'm going to give you my personal experience. Yeah. I remember when we bought our house. I mean, I'm pretty savvy. My husband would tell you, I was negotiating everything. So we bought it right after, after the housing crash. So things were were coming up. Yeah. So we decided, let's buy a house now. Right. And we bought our house for $95,000. Mind you, we had like $15,000 in our savings and stuff like that. So we both were working. I decided to, and we agreed to buy a house based on one income.
Yeah.
So just in case something happens or whatever, so that you're not living paycheck to paycheck. So after you purchase a home, the idea is take your time. It's your house. You do not want to spend so quick to furnish the home. Do this. Take your time. Because the goal is not to have one house. The goal is to have multiple.
We gonna get there. We gonna get there.
Okay. So if you're spending so much money take your time. Pick a room, furnish that, and then take your time because now your next goal is, hey, I bought a house. I can start putting more money aside. Why not get another one where I can use it as income?
Yeah.
So now that you know the process of purchasing a home, let's do the process of being landlords. Matter of fact, you don't even need to be the landlord, you just need to be the owner, and you hire a management to manage that property. Boom. So you got to think, because having your house right now is it's not whatever, it's a liability.
It's a liability. It's not an asset. Yeah.
It's not an asset. Okay. Right. So right now, when I'm done with this house after we renovate, we're planning to sell. So our goal, the reason we bought it, so we wanted to buy something so low so that when the market does get back up, we're able to get at least 80,000 in profit. That's the goal. So it's what is your goal? What are you aiming? If you just want to buy a house and that's it, go ahead. that's your goal. But if you want something where your kids or somebody can think about that, because now you're in a position where having owning a house in America is a starting point of financial independence, or being having that leverage where you can go to the next level.
Right. It's one of those pathways to build
Yes,
wealth.
building wealth. Yeah.
Yeah.
Yeah. But you were about to say something. What were you about to ask?
So you jumped ahead of me and you talked about
Sorry.
becoming no. It's good. It's good. It's good because I love this. You talked about being a landlord, right? You got your first home. You were able to, get the loan. You can afford the payments. You're still able to save up. How is it that you have a home and you're still able to go out there and get another one? Like, how does that work?
It's almost the same process. So they're going to look at your debt to income ratio. They're going to look at your income. There's ways around it, having your own business or renting a room in your house that first year. Is another way. The reason I'm saying that is you need to having a year of taxed, not taxed, filed landlord experience, meaning, hey, every month I got $500 for a room.
Right. And you can show that on your statements and all of that.
Yes. So now what you're telling the bank is, I have landlord experience. I can get this house. So what happened is, when you have that landlord experience for 1 year, at least 1 year, what happened is they use 70% of the potential, the appraised value, the rental value, as your income on top of your income. So let's say you're making $60,000 a year.
Yeah.
And you have 1 year of expense of renting. What happened is the house that, let's say, is a 2-family home. Each one is appraised for $1,700 of each, which is $1,400 is considered your monthly income in your application.
Right.
So now your income and your loan amount increase.
Now,
so you can get another house.
Now, what if I don't want nobody in my house? And I want to.
You want it again? Yeah, I get it. So if you don't have that experience, it's all about the savings. It's really about the money that you have in your income.
Yeah.
So if you're someone who don't have the land, or I'll say get a fixer-upper.
Yeah.
Or to start, get a condo, because condos they're not all that expensive. You can find a condo depending on your state.
I hope my niece is watching this one.
Okay, so depending on your state. So this is where I say find out what are your goals before you purchase a home.
Yeah.
For example, one of my mistakes that I wish I did was I had enough money to buy a condo straight out cash when I was at OSU, right?
Yeah.
I didn't. So imagine if I did, I'm still living in a dorm. I would have rented it out. So when I'm planning to purchase now, I have that income plus whatever income else that I have to be able to get another home. So if you don't have that experience, my thing is go start small. Yeah. So don't be afraid of starting small. There's this concept where now that I have a house, I have to go big. No. You're building something. Right. So buy a condo that's $40,000. Because remember, they look at your monthly income. Yeah. So based on your savings and your monthly income, $40,000, 3.5% of that is very low, easy to save. Yeah. Closing costs of that is it's easy to save. So that means, let me get a condo for $40,000, rent it out, file it on my taxes the following year, then buy a next 2-family home where you can rent, or rent your current home to purchase up your dream home. Gotcha. Or sell your current home to purchase your dream home.
Renting my current home, where would I live in that situation?
Well, no, you don't rent it until you're doing both process at the same time.
Gotcha.
So you're looking for a house, you find a home, you're gonna rent this one and then buy one. So you don't leave the house until you close on your home. So it's based on your contract.
Got you. Yeah. So the banks will allow you to look for a new home. And
as long as you're in the process of renting or selling your house, absolutely.
Okay.
Gotcha. Absolutely. Yeah.
Nuggets, guys, nuggets.
Yeah,
I
and then
know,
you keep in mind too, every bank is different,
right?
but they do follow somewhat the same structure. But the banks usually have the last
The
word.
last word, yeah.
Yeah, the underwriter, not the banks, the underwriter.
Underwriter,
Yeah,
gotcha.
yeah.
Cool. So you mentioned something earlier that I want us to talk about too. So the different types of loans. Um,
Oh, yeah, yeah.
I mean, I know the most traditional one that everybody always hears about is the FHA.
Yeah. So you have governmental and you have conventional. Okay.
Right.
So conventional is just the common one. There's not a lot of restrictions compared to the government. Okay. So the government one, these are backed up by the government, which
Yeah.
is the FHA, USDA, mass housing. There's a few others that are USDA, SHA. There's a few others too, but those are the two major ones: FHA and USDA and VA. There it goes. Ooh, VA.
The VA. So let's
The
talk about
VA.
those three. Let's break those down.
Yeah. So so it's four. The conventional. Forget for conventional.
Right.
So
But
out of
that's separate from the
from
government ones.
government. So
Right.
you have FHA, USDA, and VA.
Right.
Out of the three, the
Yeah.
VA wins. If you're a vet, you got it good because
Right.
the requirements is completely different. Where even your credit score can be like, we're not really going to pay attention too much about it. They can do that with the
Wow.
VA. Your student loans, as long as they are on deferment or forbearance, they don't consider that as your debt.
Mm.
They put it at zero. All the other loans, they'll use a certain percentage of it as your monthly, even though it's on deferment, even though it's on forbearance, they'll use a percentage as if you're making that payment monthly as
Yeah.
part of your debt. With the VA, you don't, not at all. We have a VA, by the way. So what happened is the requirements and how they look at it, there's
Yeah.
different fashions, different factors that they pay attention to it
Yeah.
to make it work for a VA. So you
Gotcha.
have to get a certification of eligibility from the military, whichever branch
Right.
you're from. As soon as you get that, we'll order. You get the DD214 to us, and then we'll order the certification of eligibility, and we start the process, and blah blah blah, bam, bam, boom. With that
Gotcha.
type of loan, you can have a 600 and get it. As long as you have the money and you have the COE, you could do it. It's
Right.
not
Are
gonna.
there certain down payment requirements for those?
No down payment.
What?
No down. No, it's not required to have a down payment and closing costs are two different things. So sometimes when
Right.
people hear down payment, it's like, well, I thought I didn't have to pay anything. No, you didn't pay anything.
Right.
It's just your closing costs. Your closing cost is the fee for the bank,
Right.
1 month of your mortgage payment,
Right.
any taxes and title fees and stuff like that. So this is where it gets a little interesting. So with any loan, so USDA and FHA does not have a requirement for a down payment.
Gotcha.
I mean USDA and VA.
VA,
FHA, you have a minimum of 3.5%.
3.5, yeah.
Conventional, you have a minimum of 3%.
Mm-hmm.
That's going to depend on your credit, and you need to
Yeah.
have the education, first-time home buyer education to get that.
Gotcha.
Your credit in that. So the VA and the USDA are the two loans that you do not have to put a down payment for.
Right.
Now let's talk about closing costs. The way I always advise because when I'm working with clients, I love to have a relationship with their realtors.
Yeah.
So what happened is I let them know, hey, depending on the market of where they at. So Massachusetts, for example, is very hard to get a seller's credit. What's the seller's credit? Is when the seller says, hey, because you're purchasing this house, I'm giving you $5,000 from my profit of my house. You're going to use that $5,000 towards your closing costs. So let's say your closing cost was only $3,200. With the USDA and whatnot, if they pay that, they give you the closing cost. You have nothing to pay at closing.
Right.
A lot of people, especially with VA, you get money back at closing.
What?
We got around 1,000 something back at our closing because they paid all our fees and we had so much extra left.
Shout out to all our vets that are watching right now.
Yeah, Scotty.
My sister. Yep, I know your husband is one. Yeah.
So there's ways around. So that's why when you have to work with a loan officer that you trust. that is in your best interest.
Mhm.
I have clients where I will tell them, hey, I can't help you, but I'm going to send you so and so because I know they can deal with it. Because I used to do all 50 states. So now I only work on Massachusetts, Rhode Island, New Hampshire, and Maine. Those are the 4 that I do loans for.
Gotcha.
So before, I'll be like, you know what? My company, I know how they work. They're not going to be flexible in this situation. Go to so and so because I know they'll be able to do it. And the reason I'm saying that is because you have some loan officers, and this is in any industry, especially when it comes to money.
Yeah.
Any industry where they're only money driven and they're not customer driven. Because if you are customer driven, automatically money comes.
Right.
Because now you're building a relationship with people that's going to come to you.
Yeah.
Period. The word of mouth is it's still the number one way of advertising. I don't care what social media you have, word of mouth still works.
Yeah.
So when you have a client that has an experience of working with a loan officer that had a great experience, oh my God, they took care of me, blah, 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 blah. Great. And not just with a loan officer, your realtor. If you don't trust them, trust your instincts. Go to the next. Don't sign anything with your real estate agent because you don't want to get stuck with them. Because there's a form that sometimes some realtors will have where that states that you're somewhat bound to them for a certain period. So that keeps you from shopping with another realtor.
Gotcha.
So before you sign anything, know that you know that you'll be using that realtor.
Yeah.
Period. Because you want, especially with the realtor end, you want somebody who's listening. Hey, I know I'm approved. For example, if you're approved for 200,000,
Yeah.
but you don't want a loan for 200,000, you want something 180. I will not write that pre-approved at 200,000. I'll put 180. Reason for it is I know that some realtors will be like, but you're approved for 200.
Yeah.
No, but this is where you want to be. So I will do that pre-approval letter at this amount. You know that you can go more. So that if you find a house and then you really love it and you don't mind going a little bit higher, that's your decision, not the realtor. So you want to make sure that you have full control in the process. They work for you.
Yeah.
You don't work for them.
Right.
So you need to have somebody that you trust, that will respect where you want to be. I remember when we were buying, we changed realtors because she kept on giving us, listen, I know I was pre-approved for 200 something thousand. I said, I want to stay at 100,000 or lower.
Right.
Period. But she kept on showing us stuff around 200,000. I was like, why? We don't want that.
Nah.
So that's when I was like, okay, cut. You're not listening. So when you're not listening to the person that's actually going to be paying your paycheck, then that means you don't. So if the realtor you're working with is not listening to your concerns and your likes and dislikes or whatnot, cut them off. Learn to do that. Cut them off. This is a big investment. This is not little purchase that you're doing. It is a big investment. So you need to make sure when you buy it, you're satisfied. There's no buyer's remorse.
Yeah.
We don't have time for that when you're buying a house. It's too late at this point.
Yeah.
So make sure that the loan officer and the agent that you work with, you trust and stuff. So in that process, I would say that's another thing to pay attention to.
Got another question for you. Let's say I find a house in the neighborhood that I want. The price is good, but it's a hot mess.
Okay.
Are there loans out there for me to be able to do some work on it?
All the loans, the VA, conventional, FHA, USDA, they all have remodeling loans. So where, let's say the house you bought, it needs help. It's $50,000, but it needs help. But you're pre-approved. You're able to go to 150, but your contractor says it's going to take $50,000 to fix it. So you have, what they're going to do is they're going to appraise the house as if it was done. It will tell you, okay, you have this much more money. So we're going to give you 100,000 because it's worth 50 and you need 50,000. We're going to give you 50,000 to get it done. Now, what I've realized now have they been doing is sometimes it's like a two closing. You close on the first and then you close after the work is completely done. So yes, you can buy a house. Actually, I would have, if you could do it, do that. It's a headache because dealing with fixer-uppers. We didn't do that way because when we got the VA, they didn't have that yet. They didn't have the remodeling loan yet. If they did, we would have been like, okay, we needed 40,000 to the kitchen done, the bathrooms done, and
Right, because I know you did do some work on your house.
A lot.
Yeah.
So, and we're still working on it. So we did the big ticket price first, the kitchen. Now we're about to do the bathrooms. So, but imagine if the VA remodeling loan was available then, we would have been able to use that. And then now your loan is 100,000, but that 50,000 just brought your value up a little bit more. So if you want to sell, you can sell it more than 100,000.
Right.
Yeah. So yes, absolutely. If you're planning to buy a fixer-upper, I say go for it. That's the best way to go.
Yeah.
Yeah.
I just want to put that out there because I know sometimes some people, they're like, man, I want to live in this neighborhood, but like, it's expensive.
Yeah,
but if they can find something that's
and just be ready because remodeling loans are a little they just require more paperwork.
Gotcha.
So just be patient. So that's where having an awesome loan officer and agent. So well, not really agent on this one. Most agents could care less about that because they don't get much from it sometimes. But your loan officer you have to make sure they know what they're doing because they can either make it a headache of a process or a pleasant one. Gotcha. And so I tell my clients all the time, listen, let me carry the stress. I just want you to worry. I just want you to do your part in regards to getting the house. That's it. I don't need you to worry.
Yeah.
It's already a stressful process. So, because you're providing all your personal information, number one, and it's an emotional process too, because this is the first time. Even if it's not a first time, it's a big expense. Are they going to approve? No, let me handle all the stuff that you don't need to. I'll tell you, don't worry about it. Being in there for so long, I can tell when a loan is going to close. Like it's not going to be a problem to close it. It might be to you like, oh my God, are they going to approve? I will tell you, no, relax, they will. Just provide the documents that I need. Now let's talk about documents.
Oh Lord.
I have seen people, listen, if you really want to buy a house, don't let the loan officer be begging you to get the documents that they have requested. Don't do that. Because that's delaying your process. That's delaying your closing.
Y'all got to come ready, people.
Yes. So we need tax returns. We need W-2s. We need pay stubs. We need bank statements. If there's anything else that we need, you need to be ready to provide it within 24 to 48 hours.
So it's funny that we talk about that. I'm gonna drop this in there real quick. So I did a course once before I moved from Ohio here to Florida, and they were talking about organization, which I think would be really helpful for people that are looking, to buy a home. You got mail coming in every day, bills, this, that, the third. Getting a cabinet or a folder or something where you can organize yourself and categorize it. This is my financial stuff. This is my medical bills. This is my electric bill. This is, my pay stubs.
Or you can do it simple. Create a binder. Create a binder where you can keep track of everything.
Right.
And Scott would tell you, my husband would tell you, this binder, whenever it comes to expenses in the house, whatever it needs to do, or our spending, our taxes, it's in this binder. So he can easily go in and track everything and see where everything is without asking me. So that way you're organized. So when you're starting the loan process, that's not when you want to be organized.
You want to get organized before.
Right. And there's another nugget I have to tell you. This is to my island people. I love you so much.
Come on now.
The saw, and all that stuff. It's great. Tell your loan officer why. Big cash deposits are crazy to deal with.
Yeah.
If you are doing
all the people out there that doing the so you're putting the $50 a week and
let me tell you how to do it. Let me tell you how to do it. Make sure that money is in that account a month before you find a house. Why? We have to track 2 months back. So I won't need that month. So let's say it's deposited in April.
Yeah.
You find your house in April. Don't be sending me April bank statement. make sure the closing is in May. So
So
all I
you
need is March and April.
so you hear that,
Yeah,
people? If you're in
yeah,
a susu, you want to call him and tell him say you want the hand early.
early.
You don't want the last hand. You want one of the hand them that coming early.
But
All right.
if you do get the last hand, know when you're gonna get it, so
Yeah.
that I can. They will tell you. Listen, I don't want to see that bank statement.
Mm.
I do not want to see the bank statement where I see a cash going. Poof. Listen, because we have to be like, because government, we have to track.
Yeah.
Where
You
did
want to know where
that
the money
money
come
come
from.
from? Yes, that's what are you doing? They don't
Yeah.
know so. They don't know assault. They don't know none of that stuff. So
Right.
you need to make sure that, and I'm telling you now, just in case you're starting the process,
Yeah.
if you're getting a SAL and you're going to use that for your down payment or your closing
Right.
costs or whatever it is, make sure that bank statement you're not providing it.
Right.
You're not
Now,
providing that bank statement.
that goes to gifts as well, too, right?
Yeah. Well, no.
Okay.
If you want to consider the gift as part, you can get a gift as long as they write a letter. They write a letter. There's a form that I give. So the person says, I so and so is giving so and so this amount of money for this purchase of this property. And if they do not mind, the thing is, we're going to need your bank statement. The gifter, the person who's giving the gift, they have to provide their bank statement before the money came out and after the money came out.
Wow. Okay.
To make sure that it came from where it came from.
Right.
Yeah. So that person cannot have a so that it no, I don't want to see that. I want to make sure that that money has been in there at least a month already.
At least a month.
Yes. At least a month. So that way we don't have to worry about it. Well, a month and a day. A month and a day. Because that one extra day I don't have to include it. Yeah. So that way you can still get a gift and they let you know, and then that's fine. You just have to make sure you do the paper trail, and that's it.
Got you.
Yeah.
Cool beans.
And also some gifts can only be used for down payment and not closing costs. So keep that in mind too. So they can only use that portion for the down payment, not your closing costs. So depending, most government loans you can, where if the closing cost is 10,000 and your down payment was 3,000, then they can give you 13,000, and that's fine. Yeah.
There's two things that I wanted to touch on too, and then I have some more questions as well.
Mm-hmm.
With we spoke about the conventional loans, right? Let's say, for instance, private mortgage insurance.
Don't do it. Oh, okay. Private mortgage insurance.
No, you have. Don't you have to have it when you have?
Wait. You don't have to.
Okay.
Okay. So with conventional. Okay. So let me give you all four. VA does not have a PMI. Mm-hmm. There's no PMI. There's this upfront fee that you pay, but that's it with the VA, and that's it. Then that's for those who are not disabled through the military. If you are, you don't even pay that. Okay, and it's something small. For example, ours was like 1,000, and they added to the loan. You don't pay it out of your pocket. So VA doesn't have PMI. USDA has PMI for the life of the loan. Jeez. I don't care if you put $30,000, $50,000, $60,000 down. You're having a PMI for the life of the loan. Mm-hmm. FHA, if you only put that 3.5% down, what happened is you have to wait until the loan goes down to that 78% paid. You paid at least down to 78%. Then you can reach out to the bank and say, hey, I only have 78% left for this loan. Move the PMI. Some banks won't approve, won't do it. Some will. So just negotiate, keep going back and forth. For conventional, there is a PMI, but it's the same thing when you pay down a certain percent. If you didn't put 20% down, that's if you didn't put 20% down. If you put 20% down or more, you don't have to worry about the PMI. But if you put less, when you get to that percentage of paying it down, then you can tell them, hey, remove it. And with conventional, most of the time, the banks will just remove it automatically. But I still say to reach out. I'm all about follow up. So follow up to make sure that it gets removed and stuff. But if you can avoid it, avoid it. But if you do, you as great as US. So let me explain what they are. So so you got a VA, of course. You have to be a vet to get a VA loan. Mm-hmm. A spouse can get a VA loan if the person died, and there's a whole process to it. And then, and USDA is a rural loan. Okay.
Got you.
You can only buy a house within the rural area. Now, just because I say rural doesn't mean it has to be your concept of rural. They have already traced a map for USDA, and it
Mm,
might look city as whatever, but if it's still in the map as rural, then it's rural. You can buy
wow.
it. So you can buy it. So there's pros and cons for USDA,
Yeah.
where there's no down payment, but you're restricted to where you can buy.
Mm,
Okay. So keep in mind that if you're like country, you like the country, you want to be far out, then
mm,
I'll say go with USDA. But any loan can go to the rural area.
right.
Conventional, you can do whatever. You can go whatever, however, you can buy a crappy
Right.
house that's like there's no roof. You
Right.
can do that. With the government loans, for you to be able to get a house that's completely discombobulated, you
Yeah.
have to be able to get a remodeling loan to fix it. You can't with the government loans, when you close, it has to be habitable. You should be able to live in it.
Got
Yeah.
you.
Conventional, you don't have to. Yeah.
Cool. Now you do want to have some kind of insurance on your home, though, right?
Oh, you will have to have homeowners insurance.
Right.
Government loans will not let you do anything without it.
Right.
You
So
have to have it.
what's the difference between that type of insurance and
Okay, for the PMI.
yeah.
So a PMI is the insurance that, hey, if you default on your loan, the bank
Mm,
doesn't have to pay so much of the price. That's what the PMI is. Okay. So with the homeowners insurance, so there's PMI, homeowners insurance, and there's the bank's insurance. Never advise anybody to settle for the bank insurance because it's going to be much more higher.
yeah.
Okay. So those two insurance, the bank insurance and the homeowners insurance, these are insurances that secure your house if anything happens.
Yeah.
If your roof, something happens there, or your house got flooded, or well, flooded is it's a different one. It's a flood insurance. But
Right.
like something big happens within your house that's covered under your homeowner's insurance, you call them. You'll pay your deductible, and
Yeah.
then they'll pay for the work to get done. Yeah. So government loans, you cannot not have it. Conventional, yes, you can opt out.
Got you.
Never advised to though. Yeah, and also with government loans, your tax, your homeowner's insurance, all is in one payment. So the
Yeah.
monthly payment that you do, it includes that. Conventional, you can have that if you want. If you don't, you can tell them, hey, separate the two. I'll just pay my mortgage
Yeah.
separately and I'll pay my tax separately. Yeah.
Got you.
Yeah.
Cool. Man, I feel like we have touched on a lot today.
Right.
A
Right.
lot of great information out there.
Mm-hmm.
Thank you so much. Let me see if I have anything else here.
Oh, I do. I have one
Yeah,
thing.
go ahead, please.
After you purchase a house, okay, so I do life insurance. After you
Mhm.
purchase this house, make sure you can get a life insurance that can pay off your house.
Mm,
So if anything happens to you, your
right.
child has the choice to be like, I'm gonna pay off and stay here, or I have some time to pay some mortgage to sell it.
Yeah.
You see what I'm saying? So make sure you have your life insurance is able to cover the total amount of your loan. And stuff. And we can have another talk about life insurance later on.
Oh yeah, I think that's a separate
It's a separate child.
oh
You talking
yeah.
about wealth building? That's a whole separate thing that I think a lot of
Wow.
people don't know about.
Yeah.
In a way of making yourself the bank and not. We could talk about that self banking. Okay, we could go
For
all
sure.
about that.
Oh
Yeah.
yeah.
So yeah,
Oh yeah, we're definitely gonna have you back on. We thank you so much,
yeah.
for
Thank
sharing all
you.
of this with us. I'm sure maybe even after this conversation is over, there might be some questions on there.
Absolutely.
We'll definitely reach out to you and get those answers out there to our
Yeah.
followers
Absolutely.
if we can, when we can, for
Yeah.
sure.
Yeah.
Let me see if my production team has anything else for me. Uh, I think we have touched on almost everything.
Mm.
Oh, I have one. So, actually, you touched on it already. You already
Mm-hmm.
mentioned it. Starting off small.
Mm-hmm.
Because some people always have that idea, man, I want this house. Like,
Yeah.
you know, getting something small, get your foot in the door, paying that off, getting some equity in it, right?
Mm-hmm.
So that you can use that money to put down.
Yes. Yes. So there's two things that you brought to my mind too.
Yeah.
About equity. You don't need to sell the house to touch your equity.
Mm,
You can do a line of credit where it's just a separate loan based on the equity of your home, or
yeah.
you can refinance and they do a cash out. So basically, let's say your house is you bought it for 80,000, but it's worth 120. The
Mm,
difference is the cash value that you can take out of it.
yeah.
So after paying fees, you'll get that portion, the remaining to you. So you can use that to buy another house or do another investment or whatnot to do that. Get a life insurance policy,
Yeah.
a whole lot. We can get all in that business. But there's another thing too that that I usually tell my client is this, that make sure that when you're buying a house, know that a house is a continuous maintenance.
Yeah. That was one of the things I was going to talk about.
Yes.
You know, the
So
expenses that you.
yes,
Yeah.
you have to keep it up. The
Yeah.
the doorknob broke. That's great. Oh, I could go next week. It's simple. You're not thinking, okay, that's something I can fix real quick.
Right.
But unfortunately, mayhem is easy to happen. Chaos is easy for chaos to happen.
Yeah.
Chaos is a natural thing to happen. So the only thing you could get to do is to keep chaos in check, is to stay on top of it. So
Right.
if something breaks, get to it.
Yeah.
Something and it doesn't even need to be broken. It could be just the maintenance of your windows, the maintenance of your water heater, your furnace. Keep
Your AC, all that.
because when you're selling the home, they
They're gonna
are
do an inspection.
looking. Yes, they're gonna look at that. Keep your
Yeah.
receipts. You bought a new water heater. Have the receipt when it was
You know,
purchased. The roof was done. Make
I've
sure you
looked in
got.
Zillow and you see that a lot of times. AC has just been
Yes.
changed. The roof has just been,
Because those
you
are
know,
large ticket prices. So your roof
yeah,
and your homeowner's insurance, they're gonna be like, how old is your
right.
roof?
I
You
seen
know?
somebody buy an old home and it was on the front page of the newspaper. It was on fire because they put a lot of ACs in the home and the electrical was old. So it couldn't handle all of that
Oh,
stuff.
that voltage. Yeah, yeah,
Yeah.
yeah. So you need to be able to know that it comes with maintenance. Don't think you can buy a brand new house, brand new, everything, the bells and whistles, everything.
Yeah.
You still have to do maintenance to keep it up.
Yeah.
Still have to, So it's this that thing, Island, when you want to make sure when the person comes to your house, they have to always seem as if you didn't even live there. So that's how my mom always say, that's how you have to keep your house, as if you
Yeah.
never lived there, like nobody ever lived there, So that's how you
Yeah.
need to
Yeah.
keep it, not to stress you out, but just to have, when you have your home binder, like I
Yeah.
have, okay, every 3 months, the filters have to be changed in the furnace. Whatever's every 3 months, whatever's every month, whatever's
Yeah.
every year, your
Right.
furnace every year before the winter comes, to get it checked and
Right.
stuff before the winter comes in. So it's those stuff that you keep track so that you can keep the house running well. So when you are ready to sell, it's not a lot of money for you to do to
So
sell,
yeah,
because
for
you
sure.
do not know what type of loan the buyer will have. Because
Right.
if it's a government loan, you cannot sell it if the handle on the stairwell is not fixed.
Wow. Yeah.
That
Yeah.
was
Like you said, it has to be inhabitable, so it has to be
yes,
safe and everything.
yes. So you
Yeah.
don't know the
Yeah. Yeah.
loan. So some sellers will kind of only conventional loans, but you're losing out. So
Yeah.
it's because
Yeah.
you don't want to do the work. Do the work
Gotcha.
so that when you're selling, you don't have a lot of work to do.
Right. So, is there a certain percentage of like your yearly income that you think that someone should set aside for maintenance on a home?
Honestly, I don't think it's a percentage. I think if you already were able to save, like have an account where it's a savings account where it's just for household emergency, household maintenance. I say having at least 5,000 in there is more than enough for that year.
Mm.
Unless it's something big, of course, but at least then
Right.
that's when homeowners insurance
What if
usually
so like let's say a pipe burst or something like that?
yeah.
Would that be covered under insurance or?
Depending where the pipe burst, yes.
Oh,
Yes,
okay.
you can. Yeah. So having that, I personally will have where I'm building it back where it's 10,000. So think about it. I had that 10,000 for household emergency. We were doing the kitchen, and our house was built in 1954. Everything was still in 1954 when we bought it. Okay, we were the first to use the fireplace. Yes. So when we opened the walls, Marlon, the one-way electricals that were back then approvable, now not. Most of all our 10,000 saving for emergencies went to that.
Yeah.
But imagine if I didn't have that, my kitchen would have never been done because I had to wait to pay for that.
Right.
You see what I'm saying? And that electrical was not covered under my homeowner's insurance. Yeah.
But
and
I'm
if
sure,
I wouldn't want to use it.
I'm sure though, once you were done with those renovations and stuff, though, your house is definitely worth.
Oh yeah, it's worth. We bought it for 90. Right now we have a loan that's 80 something thousand now. It's worth 135 without the kitchen being considered.
Wow.
So my goal is prayerfully we can sell it for 180, 190, and then get 100,000 as profit.
I'm saying though, like
yeah. So you
listen, guys,
have a plan.
This is amazing, man.
Yeah.
So listen, I want you guys to share this with your friends, your family, because like I said earlier, we touched on this. This is tax time. The government just approved the stimulus money coming in. I know some of y'all got kids. That's $1,400 for you, $1,400 for you, $1,400 for you, $1,400 for you. You know what I'm saying? There's some money coming in, and you don't want to just throw it all away.
Just get new furniture.
Don't buy the latest car. Don't invest in something that is going to equip you to live your best life.
My last advice in regards to the stimulus. My last advice: if you have no idea yet, don't buy nothing. Let it sit. Let it sit for a bit and think on what can that bring return to you.
Come on now.
Okay, do not go off and just because most people with a household average like 2 kids and two parents. So times that 1,400 by 4 if you're qualified. That's pretty good.
Yeah.
Let it if you don't have
I believe.
Yes, let it sit and think before and don't do so quick because right now you have a lot of scammers. You have a lot of people trying to take your money. Don't be so quick to go to the next venture because a lot of times, we have this and we have that. Pause. Pause.
Yeah.
Think it through. Talk to a financial advisor. They're not expensive. Some of them are free to consult.
Yeah.
Talk to a financial advisor. This year, make it a goal where you're going to do something different that's going to add more value to you.
Yeah.
Period. So think about it. I'm going to share my personal. For example, we are opening another life insurance, a whole life, where that whole life it's a large deposit whole life.
Yeah.
But what that whole life does is I automatically have money that I can tap into if I need it.
Right. Does that affect like the death benefit or something like that?
No.
No. Okay. We might need to talk.
It builds up cash value automatically. Yeah. So you put 10,000 within 5 years, you have over 50,000 that you can touch.
Wow.
And so this is where I talk about self-banking. You're using that as
all right. So
but I'm just saying, talk to a financial advisor.
That's a whole nother episode. Yeah.
But it ties into everything. But talk to a financial advisor before you guys touch that. Just because it's deposited in your account, have a plan. You succeed because you have a plan.
Right.
You plan to fail or you plan to succeed.
Right. And some of us on here, that are watching, I mean, I myself, I know you are. We're believers, right?
Yeah.
And the Bible says, in the multitude of counsel, there is
safety. Yes.
So, guys, you want to make sure that you're doing something wise. You're being a good steward of what you have coming in. So, seek out financial help.
Yes, please do.
All right. So if you have any last minute nuggets or anything that, we didn't touch, you want to put out there.
But plan. That's my only thing is plan. A year of planning. Plan.
Right.
That's it. I don't have anything besides have a plan for your money, or somebody else is going to have a plan for it.
Wow.
Yeah.
Yeah. That's
Yeah.
that's good. That's real good. I think we
Yeah.
might put that one up there. Wow.
Yeah.
Yeah.
So
Have a plan for your money, or someone else might.
no, someone else
Some,
will.
someone else will. Whew.
Yeah. Yep. When you don't get a return, that's somebody else you just paid that had a plan to take your money anyways. So think
That's
about it.
dope. Yeah.
Yeah. So yeah, I said that's my advice. It's a great year. I believe and pray that everyone use this time wisely. It
Yeah.
is, I think it's a blessing to even be here this 2021. So many
Oh
didn't
yeah.
make it. So I think this is just a blessing for us to use it wisely and stuff. And the fact that you're doing a show like that to inform the community, Marlon, I commend you. You are doing a great job.
Thank you.
Thank you. And all the other people that you're gonna be calling out, because
Yeah.
you started with gifts and music, and then now you're talking about finances and all that. So, I mean,
Right.
this is stuff that the community as a whole, from within the church and outside, everyone, doesn't
Yeah.
matter, small or old, young or old. I think this platform that you're doing,
Yeah.
keep it up. Keep it up. It's
Amen.
awesome.
Yes,
It's
thank you
awesome.
so much.
Yeah.
We are gonna have to have you back on
Wow.
because, guys, listen. Yes, she's a loan consultant. She's out there helping people, get their stuff together with their home buying process, but she's also an artist.
Yeah.
She is a writer, guys. I mean, I've heard some of her stuff. Pretty dope. Pretty dope. So, and I know you're working on some stuff soon too. So
Yeah.
we'll bring you back on. We'll probably have to
Mhm.
have you on more than once because insurance,
Absolutely.
man, you got your hands in so much. So
Yeah.
that's amazing. I would love to have even your husband on one day too.
Mhm.
Awesome man of God. Yeah.
Yes.
So yeah, we'll definitely have to talk.
Yeah, absolutely.
Yeah.
Absolutely.
Thank you so much for joining
Thank
us today.
you.
If you can hang out in the backstage for a little bit, we're gonna wrap up here on this episode. But guys, thanks again for joining in. As you can see and as you can hear, we are helping you guys, equipping you to live your best life here on Conversations with Marlon. Share this post. Once we're off, we want everyone to know all the wisdom, all the tools, all the information that we have shared today in the home buying process. And just prepare yourselves, guys. All right. We thank you so much. We also want you to sign up for our email list. We are going to be giving a lot of giveaways this season. Um, Gift cards. My latest single, Connected. Uh, we have physical copies available. We also have some other guests that we'll be bringing on. I'm sure they'll have products and stuff like that. We will be giving stuff away. And we want you to stay tuned with us, stay informed about everything that's going on with Conversations with Marlon, with my music. All right, guys. So please sign up, marloncroasdaile.com. Sign up for our email list. All right. Thank you so much. We love you. We appreciate all the support. Thank you again. Peace.